Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. Neo versus Li Auto, and why Neo looks safer and smarter right now. With Li Auto reeling from a major recall, the EV investing thesis for Neo just got stronger. Here's why leaning into Neo over Li Auto could be the smarter bet and where the risks are for both. What's going on with Li Auto? Li Auto is recalling 11,411 units of its 2024 Li Mega MPV. That's nearly half of the cumulative deliveries of that model. The recall stems from a coolant issue allegedly has insufficient corrosion protection, which can lead to leakage in battery coolant plates, and in extreme cases, even thermal runaway, as we saw. Li Auto plans to replace the coolant and the entire power battery front motor controller for the affected vehicles, which is a significant cost. As part of internal accountability, Li Auto has fired multiple employees in its quality and battery testing groups. Another reason why Neo ensures they test and retest before putting out a product. Because the race is not for the swift, it's for the one who can endure. Analysts estimate the recall could hit Li's profits by 1.14 billion RMB. If this was Neo, this would be a swap. You just swap out the battery. Meanwhile, Li Auto's deliveries are cooling off. October 2025 saw just 31,767 cars delivered, continuing its slump like Tesla. Implication: this isn't just a PR hiccup, it's a material risk to Li Auto's EV reputation, safety, brand, and profitability. Why Neo looks attractive in this context? Battery swap network, strategic moat. Neo is heavily invested in battery swapping, a core differentiator. Its partnership with CATL, world's largest battery maker, boosts its swapping infrastructure and standardizes technology. The key word: standardizes. Swap stations, if leveraged properly, can become profit centers, not just cost sinks. Edge over Li Auto. While Li Megas suffer from a battery cooling failure, Neo swapping models sidestep some of those risks by allowing modular battery management. Li Auto made its name mostly on EREVs, extended range, gas plus battery, but its push into BEVs like the Mega is relatively new. And it took them too long to transition over and they tried to rush it. Neo, however, is very much BEV first and building its business around long-term EV infrastructure plus energy services. The edge: Neo may be more exposed to pure EV adoption, which could pay off more as the market shifts. Li transition could be riskier, and we saw the shifts has already started as the CEO of Neo spoke about it. Risk control and operational discipline. The scale of Li Auto's recent recall and its decision to fire quality control employees suggests a breakdown in internal processes. Neo, while not immune to execution risks, has leaned into an ecosystem approach, cars plus power plus swaps, which potentially spreads and mitigates risks. Investors looking for a company that's building a defensible long-term platform may favor Neo. But it's not all sunshine. There's risks. Neo has historically had razor-thin or negative profitability, which we all know it's about to change. We are in a profitable month this year. Capital intensity: building and scaling a swap network costs a lot. But that's why CATL jumped in with other battery swap partners. Leverage on growth: if EV adoption slows, its big infrastructure bet may not pay off as fast as it hoped. But we see the EV industry is not slowing down in China. In fact, it's accelerating. Competition risk and worldwide, except for here in America. Competition risks: even rivals could adopt swap-like models or outbuild NEO's network, but I hardly see that happening. I see partnerships instead of them building their own. It will take them too long. Bottom line, and NEO has all the premium locations already. The bottom line, why better get a NEO especially versus Li Auto? Gap risk for Li Auto's recall is more than a blip. It could hurt its brand, very importantly, margins, and customer trust, very important. NEO's strategic differentiator, battery swapping plus BAS plus cattle partnership, long-term infrastructure moat. EV first vision. NEO is built around the future of BEVs plus clean charging, not gas backup, not a generator like Xpeng is also leaning into, and we understand why, range anxiety for them. Growth optionality. If NEO executes its power business, swap stations, energy services could become a substantial revenue stream, as we see happening now with 92 million plus swaps, not just car sales. If you're bullish on EVs over the long run and you believe in 2030 plus electric mobility, then NEO has a more differentiated and potentially durable play than Li Auto right now. Li Auto fires multiple employees over costly mega, but the damage is already done. I hope you guys found this video yet again on a Monday morning to be informational, inspirational, and motivational. If so, guys, boop, boop, boop. Don't forget to hit the thumbs up right there. Takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.